Good evening, it's David at SPX Capital with you again. And as we talked about last night, 1007 transpired to be the high of the day on the ESU9 September SPX contract. Where did that come from? Well, we completed the gap fill, and you can probably see it here. It was also a 3/4 retracement of our recent trading range, 1016 down to 975.5. So what's in store for us? Or well, no one has a crystal ball. We can talk about probabilities, and what we can see is that the volume died off today, and we can also see in a 30-minute chart that really we're starting to create some momentum divergences as we pushed out new highs. MACD made lower highs, so that is divergent behavior. Above this 1007 area, there probably will be bear stops. I mean, there are bears in here as well. I would imagine that it was some of them creating, it was stops getting hit. That was what was bringing us up today as well. You know, the advanced decliners improved slightly from yesterday. I think it ended up about 2 to 1. But really the volume across the indices, across the NYSE, was just pretty terrible. It was actually way below average, and then a lot of after hours trading sort of brought it up. But on things like the cubes and the SPY and so on and so forth, it was very low. So here we have a rising wedge pattern. Rising wedge patterns are typically bearish. So to have a downside day tomorrow wouldn't surprise me. Maybe we try and push out a residual new high. We try and peak over this 1007 and hit this upper trend line tomorrow. I suppose the line in the sand, in other words, well, if we were to continue up, I don't think that that's very likely, but if we were to continue up, I think we can effectively say that we've broken the high base on the daily really when we've taken out these highs. And I can imagine that if and when we do take out this 1016 level, there's going to be a fairly big day on the upside. In the shorter term, if this rising wedge does play out, where are we likely to go? Okay, well, here we have downside targets. Typically with a rising wedge, what tends to happen is you go and test its bottom. That sort of suggests coming back down to 977 with an outside chance, I think, of 967. Why do I talk about 967? Well, it's an old swing low over here. We also have an old swing high of 950 over here. But 967 is in fact a measured move. In other words, taking this as A, B, C, this leg here, D, would be equal to A, B. So that's definitely, I suppose that's an aggressive downside target of 967, where we in fact break down, as the probability suggests. If the bulls are aggressive, I'd be watching out for them to try and pick this up somewhere around 991, 982, that being a 50% retracement. What I would be watching for here, if we did break down, is some extremities, like an extreme low tick for entry, a tick below maybe 1500 or 1400. In fact, I would say we will probably get some form of bounce off this tomorrow. We may chop around between 991 and I would say 1002. And I think if that 991 level goes, we'll see 982 pretty quick, and then I suppose that 967 that we talked about. That's of course if things play out. Tomorrow is options expiry.